Okay, hello, 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 hello. How is everybody doing? Okay, great stuff. I hope everybody's having a great day. This is 50 pips, rocking and rolling, 22nd 08 2014. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. The fact that you're in here means you've read, you understand, you accept all the disclosure disclaimers here on the website and everywhere else, understanding that we're just performing some live technical analysis in a learning context for educational purposes only. As usual, all the sessions are recorded. You'll get an email with a recording as soon as the session is over. As long as you use it for your own personal use only, nobody will be blocked, nobody will be banned, and we'll all behave as one big happy family. So hello, 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 guys. How are we doing? So again, as usual, this is a Friday session. We usually don't have a session on this Friday. We only have the sessions on those non-farm payrolls day, but I thought it'd be interesting today. You know, we try and do these impromptu sessions, half an hour, when something interesting shaping up on Friday. Okay, so what's going on, what to look for? So we've just had Yellen out, so it's going to be interesting to see how the market reacts. What I'm going to try and do, again, because it's a busy day, I'm just going to try and keep it as short and sweet as simple. Try and go through the most interesting charts, recap what we've looked at this week, and then we'll just call it a week. Okay, so if anybody has any crazy question or any quick question, any chart they desperately want to deal with, any position they're managing, anything they want to talk about, shoot. But again, today really is a day for us to just try and go through as many charts as we can as quickly as possible, just to do a little roundup. Okay, so I think the interesting things here are going to be, again, everybody's focused on Euro Cable and ES pretty much here, so I'm going to focus on those, but we'll go through as many charts as we can. Okay, so the first thing is what's going on Euro, right? So I'll get back to the longer term picture right here. What's happened? So we had this whole discussion about these ranges. I'm not going to go through everything again because everybody's familiar with it. We've been talking about it all week, you know, about all those plays, you know, daily scalps for those moves up played out quite nicely, right? The continuation down we're trying to get, which we didn't get filled on, but you know, can't be on every terry. Right now, what do we know? We're going into that Thursday Friday range, right? We're talking about the Thursday Friday range, and what do we know on this kind of event risk? Is the market is going to try and basically come in and probe the extremes, right? Pre-post event, and then it's all about continuation. So we've broken above yesterday's highs. Pre-Yellen here, we tried to take a step to the upside, and then the sellers came in. You know, classical action. We know this means basically market's going to try and take out these stops, right? It's not about whether the level gets taken out or not. It's all about continuation, close above or below, how the flows come in, if the market can attract new sellers at lows. Okay, so this is a really interesting level here. The way this trades pretty much, you know, for the end of the day, you know, fairly classical. You know, if we start to close below and get Momo, this is going to be, you know, market probably try and take a stab at those next levels at 32.00. But right here, we're still hovering around the 32.50 pivotal level. For now, it just looks like a bit of a classic stop hunt. It looks like the market's taken out some weak players at low, taken out some weak players at highs, okay? And now it's trying to settle post-Yellen. We'll have to see how the end of the week goes. You know, are we going to see the shorts on this big move going to start to take some profits, try to lock some in? Again, don't forget we've got event risk with Draghi. We've already talked about the calendar for next week yesterday, so we'll be heads up for those things. But again, you know, the question is, are the shorts going to take some profit on into the weekend, or are they going to hold shorts throughout the weekend? I think a healthy move in the market would be to see, oops, sorry, not what I wanted to do. A healthy move in the market would see to see some shorts taking profit again. So right here, as usual, I'm not going to call trades during these whippy markets, but you know, you know what I tend to do here. We'll have to see how this trades, but you know, on paper or classically, you know, instead of shorting false breaks at lows on Friday, I'd be much more likely to look to play a healthy market move, healthy retracement, try to play for moves back up into these highs, maybe a little squeeze later on in the day. But I'm definitely not going to start shorting the lows into the end of the week, even if that means trying to get another 30, 40, 50 pips. It's really not the kind of play I would be focused on. Okay, so if anything, sidelined or looking to try and take some scalp longs to the upside, try to position some longs for next week. If you're holding short, again, you know, makes sense to hold, see how it behaves here. As long as it doesn't take out those upside stop levels we discussed yesterday, you know, price will continue to stay heavy. So we'll have to see how it behaves, but clearly interesting action around the 32.50s. Okay, now from the weekly perspective, we've discussed this a lot, right? And basically, it's still holding heavy right here. The weekly close, we're here right at weekly lows. What we discussed and what we were saying is basically we've got a couple of pivotal levels on the chart, And the focus is here for this to really, to get a lot of very aggressive downside Momo would be weekly close below these 3290s. If we move back up, we're looking at the 35 as a pivotal level. Really, this is bearish unless we get a weekly close back above that 200 DMA. But really, this is still chop zone. For this to turn back bullish and for us to be back on that 140 or higher, we need to get weekly close above the 137. So the line in the sand and that chop range we've been discussing for a long time, that call it 133, we have 132.92 on the chart, but 133 and 137, that's range is still in play. We're still hovering inside what we call the broad summer chop range. We're at risk of closing below. We'll have to see how the week ends. This is going to be interesting, but again, no change structurally on the weekly. The intraday chart is a lot more interesting here. Okay, now what's going on cable? What's going on cable? What's going on cable? If 50 is not blind, and if I can find the cable chart, I'll get it right back up and we'll get cracking. So our 15-minute cable chart. So we're talking about the fact basically that we're looking for this to potentially base here. We had some bigger potential for downside moves, but we'll look at that on the weekly. But basically we're saying here, it looks like we've actually had that final exhaustion move to the downside, and it's ready to get a little bit of a bounce. Okay, obviously subject to Yellen and subject to Draghi today, but it looks like it continues the same thing, that those scalp longs from yesterday and today, it continues to be buyers coming in, unable to attract new sellers at lows, and basically market remains bid here. So as long as we trade inside this range, remember we talked about the 166 being pivotal for action. As long as we trade inside this range, this is very choppy. There's very little edge. You could easily get taken out with choppy action on both sides of this tight range, even if you're ultimately right on the final direction. So we would not advise to trade with tight stops inside these range. We consider that a bit of a sucker's play. Okay, so the bigger level picture is still in play. Again, not a big fan of shorting lows at the end of the week. If anything, looking to play for some sideways chop, scalping inside the range, or looking for a break higher, a bit of relief from the shorts here. Now, if you're looking at it from that weekly perspective, that's again not a lot to add on that chart. We've been discussing this for a long time. We've been long for a long time on that euro cable all the way back into those highs. Then we tried some shorts. We actually got stopped out on the shorts before the big roll, but still no big deal. And then we said, this is clearly the kind of market you do not want to be stubborn. Let this go, let this go, let this go, let this come back into more interesting level, right? And we finally got that move all the way back into this 50 moving average on the weekly, which is the first big resistance zone, right? And what we said is, we talked about all these weekly lows. Basically, we talked the risk for the week, right? We talked about what was going to be for some of the structural players in here, for some of the money managers looking to position in here. We said what was the risk towards the end of the week or for the week. We talked about those 64.70s, 64.40s, right? That whole range. So that seems to be holding. So now the big question remains. There's no changes. Are we going to hold this, and are we going to continue right back and take a stab higher and continue in the upward rotation? Or are we going to see this break, weekly close below those 164, call it 164.50s, and see an acceleration back down all the way into those 160s, right? As we were talking at earlier in the week, what we were saying is, despite everybody was getting very, very bearish on cable, we suspected that towards the end of the week, you were going to start to see a lot of guys, not only on Twitter, but a lot of the banknotes that come out towards the end of the week start talking about the fact that it's time to buy the dip on cable, that, the extension is overdone, and that it's time to try and get back long again. So I suspect you'll start to see more of that talk over the week. And again, it depends on Draghi, depends what happens. That's going to be interesting to see. But yeah, exactly. But the big question in terms of the bigger players is whether they're going to, how they express the view to get back long GPB, right? The big question is, are they going to decide to express the long GPB view, getting long cable, right, or getting short euro GPB? Because seeing the current conditions, that could be, I suspect a lot of players will probably prefer the short euro GPB. The my how's volume for everybody? Somebody said volume was a bit low, but you know, again, I still prefer trading cable than Euro GPB. We've been structurally short on Euro GPB for a long time now, so those trades are going fine. So we'll still hold those. We'll update those next week. We'll discuss those. We'll discuss those next week, right? But you know, so right here, it's a big level. It's going to be interesting. You know, the end of the week is going to be interesting on cable. At least this is the first big pivotal level since we started to retrace. So again, very interested to engage, and we discussed this week how we would be playing this. So no change on current trades or anything on cable. Okay, Jay, sound is fine. Okay, sound seems to be fine for everybody. If anybody's having any sound issues, let me know. But it looks like sound is okay for Lewis. How's sound going? Okay, good stuff. So that's pretty much what we're looking at on Euro and cable. You know, in terms of the ES, there's really no change on the ES, right? Those longs that we looked at are playing out very, very well. You know, as we said, as long as we hold above the 1977s, we expect this to continue to grind higher. Reminder, I'm flat on all those ES longs here. If anything, I'm looking to get short, right? I'm trying to look for a bit more of a structural possible short. I'm in no hurry to do so. We ultimately believe that this is still going to try and press and take out that 2000 level. We just have to be a bit patient and let this play out. So we'll have to see how the day ends here. I mean, from a tactical level on the ES, we got some very nice trades. You know, pretty much one of our favorite setups, right? When we're talking about here, these shorts on the 1 hour, you know, 2 chances to get short for 5-point move all the way back down into that base support, you know. So I traded that. I'm flat. I've been flat for a while now. I'm just waiting for this to see how the end of the day, if anything shapes up towards the end of the day. I have no interest in doing anything here. So again, just tactically trying to scalp some, trying to position myself intraday to put some points on the P&L, but you know, waiting for a bigger level or a bigger, more interesting level to engage, but aware that there's a lot of event risk today. Okay, so no big change on the ES. What else have we got that is interesting? Again, Aussie, we talked about the fact that we expected this to bounce and then move back into the 93.30s. Again, I was looking for that move into the 92.20s to get long for that move back into the 93.30s. Just did not get that. As we discussed yesterday, I know a bunch of people were scalping this to the long side. I just don't think it's interesting enough because the only valid trigger for me would have been that daily close pretty much. In terms of risk reward for the move back into that 100 DMA and the 93.30, there's just not enough risk reward there. So it's really not that interesting. So no change to the trades we discussed. I still sidelined here, not a lot to do. It's still choppy. I think I can make a pretty good case for a move either side. I think probably it's just choppy. I just think there's so many more interesting opportunities than try to trade something in mid-range, right? Get chopped around in mid-range, really no interest, right? And talking about getting chopped around in mid-range, you know, that's the same thing as that USD CAD, right? You know, so this is still in play. You know, we discussed those shorts into the 50 back for moves down. I know guys who are aggressively scalping have already taken some off and managed to get themselves into BE. I just don't think that's a interesting trade, right? So again, the trade's still in play. I don't think it's particularly interesting. It's not something I would trade, but really, yeah, I mean, yeah, Jay, no change. It's still in play as we discussed yesterday. Yeah, I mean, in FTSE, again, we're not updated charts, but you know, as we said, you know, a bit of a sucker's play here in the mid-range. A lot of people wanting to get very aggressive short. You know, we expected this to break. We're still looking for this to potentially take a rally to the upside. But again, mid-range trade, not something we'd be interested. But again, you know, another really sucker's play there to the downside short. You know, we said, you know, this is very likely going to rip higher. Those signals in middle of the range are really not that interesting. And equally on DAX, right? We said you really have to respect those lows. You have to respect that reversal. I know, Peter, are you long on this? Are you still, hey, Wayne in the room. Peter, are you still long on this? I mean, that was a very nice trade. Again, we're expecting it to find some kind of resistance into this moving average. It's not something I'm in. I'm really not interested in trading DAX. I'm focused on the NASDAQ longs and scalping ES to the short side. But again, you know, in play, not a lot's changed there. Again, in line with what we discussed. NASDAQ, yeah, you know, NASDAQ, gift that keeps on giving. You know, what we said here is this just, we had that beautiful long setup You still long? Yeah, okay. I mean, very nice setup. I flattened up because I had orders to flatten up when I was off on holiday. So really, that's done and dusted. But on these trades, when the market, what we say, market can remain irrational longer than you can stay solvent, and then you feel like a hero. But you need to realize when you're when it's not really a normal move, you can get away with murder, right? And we talked about the most classical way to try and trail these is because you've got those upside targets at that 123 extension. Even though this is not a fib move we would trade, the way to try and just say thanks and be lucky is trail those just trail below the previous day close. It's a basic play, but when the market is going your direction, when the market's smiling to you, you can get away with murder. So even here, trailing all those daily closes and just waiting until you get stopped out is playing out. Again, I'm not a huge fan here because it looks like there's a bit of congestion. So right here, what I'd say, I'd be, if you want to, we discuss how to play it aggressively. If not, just trail below those previous highs and see if you can get, how lucky you can get. If you want to flatten up towards the end of the week, just to not hold over risk over the weekend. That's the move. The play we had was a much tighter play. We've already got a lot more than we were looking for on the initial long. So I just don't be greedy, right? No need to be. No need to be greedy, right? CHF JPY, yeah, exactly. Yeah, as we call it, dog against dog, the two central banks, SMB, BOJ, really, we've been looking at this for a long time and absolutely no interest. The only thing we said is we understand there's a lot of different ways to express our views. There's a lot of different charts, and we are not married to any chart, any setup, or anything. We're just looking for the best risk reward. We're looking for the best opportunities to engage, right? And as far as this chart was concerned, we said we expect this to globally stay range bound. Dog fight, dog against dog. We expect it to stay in range. The only thing we'd be interested in is patiently waiting. It took about a year for this to come back into an interesting level to get long. And right here, back TP1 done. Let's see if we can play this back into mid-range. But bottom line, as we'd say, this is a bit of a MC Hammer time, right? So I can't touch this risk-free. Just let it roll. Let's see what happens. No change in strategy on this. Again, not really preferred trade of mine, not a preferred setup of mine, but it's in play. Let it play out. Let it play out. On that Aussie NZD, as I said, you see it's breaking, it's holding above those highs. Once we got stopped out on the short, just that's it. There's so many interesting charts. You see how many played out. Got stopped out. Next, just bury it, right? Bury it until we get another interesting opportunity. It's not a core chart for us. There was an opportunity to engage. We engaged. It didn't work. Who cares? It's just another trade, just another day in the office. Some work, some don't. But we know that with the risk reward we trade, P&L takes care of itself, and even the percentage win rate usually takes care of itself without that risk reward having to weigh in too much, right? And so that's pretty much it. What else we got? USD JPY. As we said, we're looking for this to break out to hold that 200 DMA and continue to go towards the 104s. So we're trading 103.88s. The trade's done and dusted for me if you traded the breakout. Finished. Nothing more here. Again, structurally, we're still more long than short here, but that's done and dusted. If anything, we said, gun to your head, you have to be cautious and you have to respect this previous resistance. This is going to be the next pivotal level now. Weekly close, daily close above here is going to be very, very bullish, but all things being equal, you'd want to respect this resistance and you don't want to be too greedy. And again, I'm not a huge fan of holding big overnight risk over the weekend. So, I'd say thank you and then reassess next week. Euro JPY, what's going on Euro JPY? Not a lot is going on Euro JPY. We're still holding there. That fake out on the daily took out week longs, then bam, closed long. That's still in play for that move back into the 138.90. So that pivotal level. So that's also one that's pretty much risk free and playing out, even though it's a counter trend trade. Just let it play out, right? Let it play out. No big change on that. What else have we got in terms of charts? AUD JPY, again here, as we said, don't be stubborn. We traded this to the short side. We waited for those reversal candles at lows to get out of our get out of the shorts, and that's it. Respect it. It's trying to break out. This could break out higher. We could look at possible longs early next week on the breakout trade, depending how this closes today and how we go into the open. So we'll focus on this next week. This is going to be something that not a preferred chart of mine, but this is something that's going to be up as an interesting chart for us. NZDJPY, what do we got going on that NZDJPY? That's another one that's risk-free and in play. This could be the start of a nice big structural long here, holding all those lows. So again, no change here. I have no problem holding this over the weekend. This is a longer term position. This is a swing. This is in play. Nothing to add. We've already discussed this. NZD-USD, what's going on NZD-USD? So again, we're looking at exactly the setup we were looking for, right? As we said, we got some TPs off on the original longs, then we got stopped out on the aggressive plays, and then what we said, we were looking for a daily close to come back and close positive above the 8400, right? We talked about this 8400 being the pivotal level. Once it broke, I said, don't be stubborn, don't try and front run this, wait for the signal. Bam, we took out some weak longs, we closed back above the 84s. Now this is still heavy, right? This is clearly trading heavy, but if you're trying to get long, this is a decent setup to try and play this. As we said, we're playing this, trying to play the daily close for 20-30 pips to the upside for the scalpers, and basically for the other move is a move back into those that 200 DMA, those 8450s and possibly higher. No change to what we already discussed. So you see here on the open, we traded up about 27 pips or so. So that was a decent play, talking about those scalp plays for the 20-30 pips to the upside, and it's still in play. We might see a lot of choppy action here, but as long as those lows hold, there's a good chance we get a move back into the 8450s. Risk reward again is not super ideal on the trade, but it is what it is. It's one of the setups. It's not a AAA setup, but it's one of the setups we look at. What else have we got going on here? That's pretty much it. I don't know if anybody has any other question. I know we don't have everybody in the room on the Friday updates because they're not really scheduled. But I think here it's just a question of waiting to see what goes on, how the market settles post Yellen, and keeping in mind that we do have that event risk with Draghi speaking. Right, so it's a bit of a question mark. You just have to be patient. You have to understand this kind of market. We're still semi-holiday chop market. Flows are coming in. Some fundamentals are starting to change, and the market's just wheeling and dealing, trying to take out weak players, and we're seeing some of the bigger players trying to reposition on some bigger trades, right? So we just have to be patient and see how this plays out. Again, the conditions haven't been that easy. I think some of the moves have been overextended, leading to the usual some of the people getting a bit lucky, thinking they're God's gift to trading. But it's when the market goes against you and it's behaving in a not non-natural, we don't like non-natural, but a bit of a stubborn way, just take the stop outs, and that's it. We focus on what happens 80% of the time, not what happens 20% of the time. Let the pikers get excited about what happens 20% of the time. We focus on what happens 80% of the time. But however, when the market moves irrationally in brackets, right, and moves in your favor, say thank you. Don't be a pig. Don't add to the positions. Just let it go. Let it move in your direction, trail. We've got different ways of adapting to the strategies, and just it's just another day in the office, as we all say. It's the same movie. Only thing we always try and do is try to focus on understanding what turns the movie can do, how the endings can slightly be different, and we're focused on the future. What's happened, and that's pretty much it, right? Yeah, I do, Robert. Yeah. Okay. So again, guys, it's a really busy day. Stuff is moving. I'm going to manage some positions into the end of the week. I'm going to wish you guys an awesome end of the week. Again, thanks for flying with 50. Have an awesome one. Thanks for the guys who showed up for the impromptu sessions. The other guys are going to catch their recording. Stay strong. Have an awesome one. Take care, and talk to you guys soon, okay? Have an awesome one, guys. Take care. Bye-bye.